and that is a rather discouraging view on the macro consumer. Barclays today downgrading the entire retail sector to neutral from positive, citing a meaningful summer cool down in sales and worries over inventories, but not everywhere. And there are some stocks they like. Barclays senior retail analyst Adrienne Yih is the one behind the call. She joins us now. We're going to get to the stocks that you do like. Want to have some optimism here, Adrienne, but how much of a macro slowdown are you and your team seeing overall?
So we're seeing an intensification of promotions. And so that is the first line where you will see the weakness because they're actually trying to induce traffic and conversion. We're seeing promotions at the same type of levels that we were seeing them in the first half of last year. In the first half of last year, retailers were trying to get rid of anywhere between 10 and 30% of their inventory. So when you see that same level of promotion happening now, it's for a very different reason. They're not trying to solve a problem to get rid of inventory. They're trying to stimulate demand. That's the reason that we made the call today.
Yeah, and you also write about what you call the negative wealth effect. And we, of course, we know that lower income consumers are always hit hardest by inflation and everything. But you make a point to note that even sort of upper middle class consumers who are just getting bludgeoned by higher auto insurance rates, home insurance rates, prices up 20 to 30%. Now they seem to be the group that is, if not angry, certainly frustrated.
And that really is the crux of it. So over $70,000 household incomes are roughly, call it 45% of the number of households, but they are 2/3 of the spend. Over 100,000 is a third of the households and half the spend. That's where all the spending actually happens. Inflation is so insidious because it started at the 50K consumer in April of 22, and then it's had this creeper effect, right? So the 150K cohort and above didn't start negative spending, year-on-year negative spending, till mid-2023. We are only 1 year into that. So prior to this, you talk to people and they're kind of annoyed at inflation and they complained about it. Yeah. What's now happening is we're in year 2, 3, and they're actually taking action and they're pulling back on spending.